Forex Portal, bringing you another lesson in Forex, and this is lesson 2 on candlesticks. And in this lesson I'm going to be discussing Dragonfly dojis, Gravestone dojis, Morningstar dojis and Evening Star dojis. This lesson brought to you by the Forex Portal's Discipline Indicator, the Discipline Indicator, your essential trading tool. Now, in the previous video, we discussed shooting stars and hanging men. Now, there's no difference between a shooting star and a hanging man and a Gravestone and Dragonfly doji. The only difference is the size of the body. On a classic Gravestone doji, there will be no tail and no body. On a classic Dragonfly doji, there'll be again no head and no body. However, if you do these formations are very rare. You seldom get candles with absolutely no head or tail. So these two formations still count as Gravestone and Dragonfly dojis. As long as they don't have a body, then we're in business. So as I've already explained to you how these candles open and close, it's exactly the same principle for these candles. So let's look at some examples. And the first example we're going to look at is on EUR/USD. This is a daily chart. This is why at the end of every day, before the next candle forms, the next daily candle forms, look at today's candle. It will tell you quite a lot, or can tell you quite a lot. In this case, we've got a classical Dragonfly doji, where prices come down, bears have pushed down to here, the bulls have taken control, pushed the price back, and the price has continued on. And had you entered long here, you would have banked 400 pips or so. Yeah, 400 pips. So that's a classic Dragonfly doji setup. Jump into EUR/AUD, where you see very nice correct Gravestone doji, where again bulls have pushed the price up. There's an indecision candle here, but the bulls have entered the market here, pushed the price right up here, but the bears have pushed right back down again and pushed the price back to the open, and they've continued on in this way. And again, had you jumped in here, you're looking at a move of 650 pips. So again, if at the end of the day you've seen this doji form, it's a fairly good sign that the bulls have left the market and the bears have got it to themselves. Right, now then, what can be somewhat confusing with these Dragonfly and Gravestone dojis is when they're the wrong way around, and you can get them so that they are the wrong way around. And let me show you this one. Now, this is a Dragonfly doji, but logically it doesn't make any sense, this chart, because the bulls have pushed the price right up here, closed the candle here, the next candle's open here, the bulls have pushed higher, the bears have now pushed back down again, so you'd expect this now to be going this way. However, the bulls have pushed back again, and they've taken the bulls have taken the price back to the open. Now the momentum is clearly with the bulls, but the next candle has closed as a bear candle, and the price has gone this way. So these candles can form either way around, and you've got to be careful with them. Another example here is on the GBP USD weekly chart, where you got an absolutely classical, a textbook Gravestone doji with hardly any tail to it. And again, the bears have pushed the price. The bulls have taken the price here. The bears have pushed the price down back to the open. Logically speaking, we should be heading in this direction. However, the bulls have stepped in and pushed the price up. So again, if that candle had formed, and this is on a weekly chart, which again at the end of every week, at weekends, there's no respite from Forex. You should go through your charts and look at every chart and look at every weekly closing candle to see whether it's telling you anything. Now this one is clearly telling you something's happening. We've had a long downtrend. This has been going back for over a year, well over a year, and suddenly the trend has changed. So if you're aware of that and you can jump on that, I mean, had you got in here, say for example, this is 1500 pips up to this Fibonacci level. Again, the significance of Fibonacci, if you see here, it's hit the 50 fib and rejected it. Check out my video on Fibonacci to show you how you can trade on Fibonacci and how important it is to your trading. Right, so there we have Gravestone dojis and Dragonfly dojis. They're slightly more complicated than the next candles I'm going to talk about, which are morning stars and evening stars. They're fairly straightforward, and I'll bring that to you now. Okay, so we've taken a look at Gravestone dojis and Dragonfly dojis. This is your standard doji pattern. You'll see these all over your trading charts. If this candlestick had a body, it would be known as a spinning top, but spinning top, doji, all the same thing. Let's look at some examples. Let's take a look at USD CAD first, and we can see at the top of this bullish run, right at the top, we've got a evening star doji indecision reversal candle. If you're trading, look at your charts at the end of the day, look at your candles, see if they formed a pattern, any shape. If it's one of these candles, ignore it. It's not going to tell you anything. You've no idea what's going to come next. However, this candle says something might be happening, so be wary of it. This would have been a nice trade, nice bearish reversal. If we look at a Euro CAD daily chart, again, less convincing. A bearish run down here. We've got an indecision candle. It's a Morningstar Reversal, indecision. The bulls have stepped in, pushed the price up, but they've given up to the bears. They've pushed the price back down again, and we've seen some sideways movement subsequently. So the only other candles that we need to mention as far as dojis are concerned is the long-legged doji, which is, as it suggests, it's a doji candle with long legs. So in this example, the bears have pushed the price down, the bulls have pushed the price up. They've met in the middle. There's been no movement. The open is the same as the close, and in this case, the bears win out on the next candle, and they've driven the price down. It could have gone the other way. In this case, it's gone this way. The only other formation that we need to mention really on dojis is the abandoned baby. Now this is a very strong candle. However, you don't really get them in Forex trading charts. You see them you see them more often on stocks and shares, but on Forex they're quite rare. If you do see one, it normally means it's a very strong signal that if it's a bullish abandoned baby, it will appear at the bottom of the chart, bottom of a trend where the bearish trend is this way. There's been a gap between the close of this candle and the opening of this candle, and similarly there's a gap between the opening of this candle and the close of this candle. So very strong bullish reversal candle. Obviously if it was the other way around, it would be a very strong bearish abandoned baby candle. So those are your candlesticks for this lesson. In the next lesson, I'm going to discuss tweezer tops, tweezer bottoms, green Marabuzo and red Marabuzo candles, and also magic candles. So look out for that.